All right. All right, everybody. Just double check, make sure everything's okay. Can y'all hear me okay? I'm gonna double check before we get started. Change that to shit. All right, you guys. Well, we will get started now. So in today's video or live stream, I pretty much want to go over some very important things that most people don't have understood. Most people kind of like all over the place. So I hope after this live stream you have a little bit more clarity in terms of what you need to focus on, how you structure specific things, whether it's targeting, whether it's daily bias, whether that's weekly prep, like how you prep for the week, and just the overall process and how you can be organized. All right, so the first thing I want to kind of point out that'll go alongside the weekly prep process is obviously daily bias and targeting. Okay, daily bias. I like to talk about daily bias in terms of one of three modes of delivery, which has to do with either price wanting to, on this daily, weekly, or monthly chart, either it wants to attack a previous high of some kind, which I'll mention, different consistent highs and lows that you can like aim at on a daily basis. It's either creating rebalancing or retrading to an imbalance or some other form of a PD array, depending on bias, or it's consolidating. Okay, so if you can ask that question and determine which mode of delivery you're in, it'll make things a whole lot less confusing. And again, you're not going to be correct every minute of every day, every engagement that you do in the marketplace. You're not going to fully be 100%. There's no 100% in this game. It's all probabilities, right? So if you struggle with having to be perfect, I highly suggest you get over that and really realize that perfection's not going to be attainable. But yeah, like I said, in terms of daily bias, there's one of those three modes of delivery. Either it's attacking some form of a high or low, it's creating rebalancing or retrading to an imbalance, or some other form of a PD array, or it's consolidating. And there's particular behavior that has to take place regardless of which one of those modes of delivery we're in. Okay? Like for example, on this daily chart, in my private community, we've been talking about how this retracement here could potentially lead us to, price just reaching to a premium array. There's a 2-day order block here, and then continue to fall lower, right? Unless, of course, our validation and invalidation points get taken out, which I can maybe add that into this. I think I've talked about that already on this YouTube channel. But yeah, in terms of this, when price was, when it hit this low, filled in the rest of this fair value gap, and then price started its move higher, what was the mode of delivery given those three questions? Right? Well, price basically took out sell side liquidity, and when it does that on the higher time frame at a significant level, which this is a previous week's low, it's reasonable to anticipate price to want to retrace. Right? So in that case, price reached for some form of liquidity in the form of a higher or low, filling in the rest of this fair value gap. Once it achieved that sell side liquidity, now price kicks into a retrading to an imbalance or some other PD array that's above price, because price doesn't just go in one direction, right? Like for example here too, price reached lower after failing to get above the highs, reached lower targeting this liquidity down here and this fair value gap, right? So those two of those three questions in play at this moment. Once it did that, what did it do? It retraced back into some form of a premium array. You could have said this fair value gap or this order block, or because both of those are there, you could have said both of those are going to be reached into in this retracement before we go down. And then it's also got this weekly inversion fair value gap as well that's acted as resistance. Okay, so then price delivered off of that, right? So the mode of delivery, once price got up into this area here, as we could see, it's doing just that. It's retraced from, you go from high to low. It's retraced to a premium array, equilibrium somewhere in here. I'll leave that for you to mark off. And then now price is rejecting from the high, okay, or from that premium area, also respecting the weekly fair value gap inversion level, which we could see here. All right. And if you guys think the music is too loud, or if there's, if you can even hear it, or if you can't hear me good, just let me know in the comments so I can know. Otherwise, I'm just gonna keep pushing forward. So yeah. So in terms of what has the weekly chart done, it's basically came up and attacked these highs. It's hit an order block. It's respected the order block, right? Drag that over. You can see how beautifully it's respected that. Left equal highs. Okay. So price, what you can also notice with price here is we're now consolidating. And if you take your fib and you go like this, you can see that we have met an equilibrium area on this weekly time frame. So that's another thing in terms of bias. Depending on what the price structure looks like and where price is sitting at, given the dealing range, the current range of opportunity that we're trading in, if we're near equilibrium, especially on the higher time frame, that generally leads us to consolidation. Or if we're bouncing between new week opening gaps, multiple new week opening gaps, if we're just bouncing in between those, which you can see from like the 1 hour chart or 15-minute chart, that also promotes the idea that we are in a consolidation, or that we should anticipate some form of a consolidation. It's not ironic that this is occurring on a day where there's a holiday. It's Memorial Day here in the United States. So the day before, the day of, and the day after a holiday are technically, in terms of what ICT classifies as low probability, right? The day of, or the day before, the day of, and the day after. So you want to keep that in mind when you're trying to engage price, that that's something to keep in mind, right? Because part of bias, part of consistency in identifying where price is going to go, high probability, low probability, part of that is understanding the current condition and the price structure that we're trading within, right? And we can get into a deep dive in terms of market structure and that type of stuff, maybe in a little while, or in another video if I don't get to it. I have a lot of stuff I want to cover today. All right. But yeah, so in terms of what price has done on this weekly chart, right? Price hit the high and then retraced. What did it retrace to? It aimed for some form of a low. Each of these candles is a weekly candle. So price came off this high, reached for this weekly low, also reached for this fair value gap on the weekly chart. So in terms of the three questions I mentioned, is it attacking some form of a high or low? Is it creating, rebalancing, or retrading to an imbalance or some other PD array? Or is it consolidating? Price basically reached for this fair value gap on the weekly after creating the fractal high here, and then basically has not had the strength to continue going higher just yet, right? And it may not, right? We'll discuss deeper in terms of the week, in terms of what could happen next when we talk about the weekly prep process, but that's going to be a little bit later in the video, so stick around for that. But yeah, so since price is hanging around here, right, and it's a holiday, we don't have much of an expectation when it comes to bias, but we do have an answer to one of those three questions, right? Basically, price has reached down for a retracement to a discount on its way to attacking a weekly fair value gap, right? If you look at the monthly chart, right, prices came off of this order block too, right? And this basically triggered price to reach lower. You know, price could easily reach down for previous month's low and still be valid to go higher, just like it did here, right? Reach down into this order block. We're kind of back in alignment with that order block too. You go from this high and the body, you drag out that range, and you can see that we still have a valid order block in play for price to go higher. But you can also observe the consolidation that price has been trading within. And if you take what I just said and measure out equilibrium, we can get an equilibrium point for the higher time frame monthly chart as well. So there's an equilibrium here, which is on the weekly chart, where we can see consolidation. And then you can also see on this monthly chart, price took out sell side here, price took out buy side here, and now we're just working within that range, you know, kind of bouncing back and forth, right? It's a holiday again, right? So you don't want to have any type of crazy expectation just yet. But yeah, when you look at these higher time frames, when you first start looking at the chart and trying to identify bias, keep things as simple as possible. You want to ask yourself one of those three questions. Is price attacking some form of a high or a low? Is price creating, retrading to, or trying to rebalance some imbalance or attacking some other PD array that's near price? Or is it consolidating? If you answer one of those three questions, or you can get a feel for that helps you navigate what the narrative is in price. Okay? And then you can eventually understand the bias on a day-to-day basis, working within that narrative, okay, based on one of those three questions. All right. So what highs and lows are significant, right? Like, because that's kind of subjective, right? Like if you're just a new student, you're probably thinking, oh, well, that sounds easy enough, but which highs and lows are significant? Like, which one should I focus on, right? Because it can be a hard question to answer if you don't have experience, right? Especially trading ICT concepts with the vast library of information. Okay, well, I hope that this list I'm about to give you guys, which I normally give to my my private community, we harp on this a lot, constantly, every single day. We observe these liquidity pools, and it shows you why you should never worry about not having a trade setup, because these levels are present every single day. Every day. Unless the market disappears, these will be there, depending on what the narrative is and what the bias is, and what the overall delivery and price is going to be. That'll determine what levels are going to be used or attacked in terms of liquidity targeting, based on this list that I'm about to pull up right now. I give this list out and I give this list out every week, every month, every day, because if you go back and back test this after I share this with you, you're going to see just how common these levels are, and just how often they get hit. You know what I mean? So let's pull that up real quick. Let me find it real fast. Okay, so Yeah, I can pull. Oh, well, I'll just keep it right here. See, this is inside our mentorship, right? Our mentorship community. There's a bunch of different things like this that we look at every day, every week, every month. And it's part of our weekly prep process. It's part of our daily prep process. It's part of our navigation process, okay? Because there's a whole bunch of different highs and lows and, a bunch of different opinions and all this different stuff on the internet. But I can guarantee you, you can keep your eyes on these areas, even to frame runs on liquidity to set up your YouTube model entry or your breaker entries or whatever the case may be. You can keep these levels in mind and be very effective eventually if you practice, okay? Or if you spend time with me on these live streams when I trade live. I've had a pretty hectic last 2 weeks, so the lives haven't been as consistent, but they're going to be once I'm finished with all this stuff that I have to do. It has to do with the funeral and different things, unfortunately. But yeah. So write these levels down. What do these levels stand for? Previous day's high, previous day's low, previous week's high, previous week's low, previous month's high, previous month's low. Okay, that's for your higher time frame references, and it assists you in answering one of those three questions. In particular, which high and low, or which high or low is going to be attacked on that higher time frame. Okay? And then once you figure that out, when you get down to the lower time frame trying to navigate, you use these levels in conjunction with the higher time frame levels to help your navigation skill, right? To help you navigate which one of those three questions is being delivered, okay? And then what levels are significant within that overall narrative when you answer one of those three questions. All right? So write these down, keep them noted, and I want you to, one actionable step I want you to do, obviously, is going to be to backtest these levels. Okay? If you backtest these levels, it's going to give you so much clarity, eventually. It's not going to just be, holy grail, right? But when you're targeting and when you're in a trade setup and you're trying to learn how to trust your ideas, knowing one of those three questions and answering one of those three questions and knowing, which one of those is at play, and then being able to know what liquidity points on the lower time frame to the higher time frame are going to be traded to or through or have a high probability of being utilized, knowing that stuff is extremely important. And this may seem kind of simplistic, but I guarantee you, this doesn't have to be rocket science. Okay, there's a lot of moving parts in many cases, but you'll figure out which one of these liquidity pools is going to be your favorite. For example, my favorite is London's high and London's low, and then previous day's highs and previous day's lows. There's always a previous day's high. There's always a previous day's low. There's always a London's high and London's low. So there will always be some form of a setup dealing with those levels. Okay. And then if you understand the daily range, and if you don't understand the daily range, you should go look at my video that I have about daily, weekly ranges, because that'll help you. But when you're navigating the weekly range or the daily range, answering one of those three questions, and then understanding these liquidity pools that you have at your disposal that will always be there. Okay, it's not like there won't be a London session one day. Or it's not like there won't be a previous day's high or previous day's low someday, unless they take the markets completely away from us. And of course, I got this perspective in terms of trusting these levels will always be there and there will always be a setup based on what ICT has taught. He didn't teach it directly like this and lay it out like I'm laying it out for you so you can see it clearly. But he, through all the hundreds of videos and then thousands of mentorship videos that I've, had to go through, I've pulled out some simplistic ways to view things. And this is one of those simplistic ways relating to bias and relating to why you can trust that there will always be a setup if you just understand how to navigate. Part of your navigation skill and daily bias consistency will come from your ability to know how to navigate these particular levels. First, you have to identify them, and know that they're there and why they're important, obviously. And then you need experience applying these things. You're going to get that from watching price live, and you're going to get it from watching through different videos, keeping these things in mind, and then studying and backtesting previous price delivery, right? And we will apply this when I get to the weekly prep portion of this lecture I'm doing for you guys today, which is going to be probably maybe an hour or so, maybe longer. You'll see me apply these live like my private community sees me do every single day of every single week. Okay? Because it's not just understanding that these are there that's important. It's understanding how to apply it to the chart and use it as a navigation tool. All right? So again, if you haven't identified, or if you haven't written this down or screenshotted it or whatever the case may be, I highly suggest you do so. All right? All right, so I hope you got that down. All right, so when price creates a fractal high like this or a fractal low like this, another key element to bias and understanding what price is going to do from these higher time frames. Sorry about that. A key element to understanding what it's going to do potentially, when price takes a portion of liquidity, okay, like say it runs a high like it did here, or say it runs a low like it did here. When price does that and creates this fractal pattern, either a fractal high or fractal low on the daily and weekly time frame, specifically the daily, the next two candles can be expected, like if it's doing something like this, the next two candles can be expected or anticipated to retrace. Why? Why can we anticipate that? The next 2 days can be, potentially going against the, bias in this case, which would be bullish. Why would a fractal high be important? Why would the next 2 days be potentially considered as retracement days? Well, when price creates this fractal high pattern, the next couple days can be anticipated to reach for some form of a PD array. Remember, one of the three questions. Because maybe this run was to attack a previous high that's over here, or to run into some form of a PD array. Well, once a fractal pattern forms at that area, it needs to retrace for it to go higher. Sometimes it won't, like it did here, it just kept going. But did a fractal high form that could instigate a retracement? No. Did a fractal high form here? Yes, it did. So what happened? The next, day or so, reached down for previous day's lows and fair value gap, right? So your bias, even if it was bullish here, when it creates this fractal high pattern, it tells you it's like a speed bump. Like, okay, we're going to stop for a second and then we're going to reach down before we continue going higher. Okay, obviously it kind of rolled over here, but sometimes that happens. And this is a Thursday or Friday, excuse me. Right, so that, price was bullish and it had kind of like a, paused the day because it was so bullish. But it's even more relevant in terms of this topic that has to do with fractal highs and fractal lows when we're coming off of aggressive moves like this, because that will give you pretty much a signal that we're probably going to not continue just yet. We're probably going to retrace before we continue. Retrace for what? Ask yourself one of those three questions. When you see a fractal high, what could it be reaching for if it was to retrace the next 2 days? It could be retracing for some form of a PD array below price, in this case, a fair value gap. So what would your narrative be? In this instance here, we were bullish, we created a fractal high, so the next 2 days, we're not going to force bullishness until it shows itself again that it wants to be bullish. So this would have been a bearish idea, right? And maybe you were able to catch something under the perspective of it's going to reach down for this fair value gap because it created a fractal high at a liquidity level that was taken on the higher time frame. So the next 2 days would be anticipated to be potentially bearish. Where would your draw on liquidity be? Well, you want to ask yourself which one of those levels on that list I just gave you would be potentially relevant. But then also keep in mind the three questions. Which one of those three questions can be answered and applied to this chart? Is it attacking some form of a higher low? Right, let's just say this is, oh, why is it not letting me replay? Oh man. Oh, there we go. All right, let's say that we were here, okay, and price created this fractal high. The next candle here, the draw on liquidity would potentially have been this fair value gap, right? It'd also be these equal lows here, because this is the daily chart. So remember I said on the list, previous day's highs and previous day's lows are part of that. Well, this is a previous day's low if this was the current candle we were working within. So what would our idea be? It'd be a bullish market, right? But the fractal high shows that we could potentially retrace. So in that moment, we would have to pause our bias being bullish, and then we can anticipate before it is going to be bullish again potentially. We'd like to see a reach down to this fair value gap, because that's one of those three questions, right? So if you I'm trying to paint the picture as far as, if you go into the market asking yourself one of those three questions, is it attacking some form of a higher low? And if so, which one? Based on the list I gave you. Is it creating rebalancing or retrading to an imbalance or some other PD array? In this case, below price, because of the fractal high forming and the idea we discussed. Or is it consolidating? And in this case, obviously it ended up doing a consolidation, right, up in here. But again, sometimes that happens. And if you're asking yourself these three questions, you're able to not be so confused, right? And again, it takes practice. It's going to take you practice to do this. But that's why I go live. That's why, my private community has lives every day applying the things that are going to be fully discussed here. And then even most of the videos, right, on my YouTube channel. I keep this stuff in mind when I'm trying to discuss daily bias, because this is what helped me. Because there's so many people that try to break down bias in such a confusing way, and there's deeper levels we can go to in terms of validation with fundamental analysis and stuff like that. But if you don't understand this, those other things are going to be a little bit more difficult to understand, right? If you don't have a basis of navigation or some way to make it make sense to you in terms of narrative, which is basically what we're talking about, one of those three questions determines the narrative. And then your daily bias or draw on liquidity could end up being one of those liquidity levels that I have on that list I just showed you guys, right? And if you didn't catch the list, write these down exactly how I have it, okay? Because it's important when you're able to answer one of those three questions. Is it attacking some form of a higher low based on the higher time frame, or is it attacking some form of a PD array? That being or is it retrading to one of those PD arrays, or is it consolidating? You're able to drop down to the lower time frame and see navigation and targeting as you are doing things on a daily basis. Right. By the way, if you guys got questions, don't hesitate to hit me up in the comments, because if you sit there confused and you don't send a question, and I continue to teach, not realizing you have a question, it's going to be really difficult for you to understand. Because this is still a process. It's still a process. I have 4 years experience of applying this logic. So, someone that has less or has never applied this perspective, it'll be a little bit confusing. But that's why I'm doing this live instead of doing a video, so you can directly ask me questions. Okay? So definitely use that resource. Right? And then, of course, you want to observe all the things that we discussed so far. You want to also take into consideration the economic calendar. All right? One thing that most people don't realize about this economic calendar when it pertains to daily bias and weekly bias and narrative, so on and so forth, is the fact that, just like how kill zones are important for us when we're on the lower time frames for timing of particular moves. Well, if you're looking for, for example, if you're looking for this to, do what we said and come back and retrace to a premium array to possibly continue going lower, if you're looking for when that's going to occur like what day you think that that's going to actually take place, the economic calendar can be used similarly to like a macro on the lower time frames, but the economic calendar can be used as a macro, quote unquote, for higher time frame price delivery, because in order for big moves to occur from this higher time frame, there has to be institutional sponsorship behind the move. And when can we reasonably anticipate institutional sponsorship? Well, we can use this economic calendar in conjunction with what we feel the narrative is. That'll put you in position for what day, also what time, because the day and time is mentioned here, a potential move can actually occur using that higher time frame, so you're not aimlessly waiting for this retracement and then the delivery and price. So I hope that makes sense, because for a lot of you that may go right over your head because maybe you're looking for order blocks or different things to be mentioned, but this is what I just mentioned. All the things so far is so powerful. And I have many students that have come to me that have literally given me some amazing testimonials over just this by itself in terms of navigation, identifying daily bias and weekly bias and narrative. It simplifies it a little bit while not taking away from the effectiveness, which many people unfortunately do when they teach. They take away from the effectiveness because they try to act like they created something, or they try to, put things in some, restructured way to make it sound like they created it or discovered it. And it's just nonsense. You know what I mean? And that's why so many people fail when they watch people other than ICT, or even when they watch ICT himself, because they don't have the right mindset for it, or they don't know what to look for, and they're trying to do, all the new things that come out, and it just, it becomes confusing, and it extends the learning curve when it doesn't have to be that way. All right, so again, you have to ask yourself one of those three questions the first time you get on the chart. Ask yourself one of those three questions. Is price attacking some form of a higher low based on the list I gave you? Or is it attacking some form of a PD array? Is it creating, rebalancing, or retrading to some fair value gap or some PD array on the higher time frame? Or is it consolidating? Once you have an answer to that, you want to go to the economic calendar, try to figure out which day there is potentially red or orange folders that may be impactful when price does get into that area. Or maybe one of these news events will push price into that area. Maybe on Tuesday, right? Hypothetically, maybe this news event pushed price up into this order block here, right? Maybe that, the whole string of news events is what made this go higher into this. And then you see how this on the bottom part of the chart says Thursday. Maybe the Thursday news event ended up making price deliver, or start the delivery to the downside based on the narrative and three questions that we've discussed, right? And of course, we haven't been to the lower time frame yet because bias comes from these higher time frames. But I hope that's like flicking off some light bulbs in your mind, because it just helps you be patient. It helps you understand when price should actually move or create these particular moves. Okay, and it it shows the importance of the economic calendar, and then it also shows you how you can kind of simplify your mindset and thought process when you go into the chart, no matter what asset you're utilizing. I use this for every asset that I trade. I talk about this stuff pretty much every single day in my private community. Like, this is like a huge process, or part of the process, when it comes to bias, weekly bias, narrative, and just identifying draws on liquidity, right? Because once we figure out the higher time frame and all these things we discussed, once we come to a determination of what's happening there, then these lower time frame liquidity levels become more significant, because those will be utilized on their way, or on price's way to attacking the higher time frame assumption that we've just discussed, using also the economic calendar in conjunction with everything. Okay? So I really hope that made sense. And I hope it's stuck. And if you guys got questions, let me know. And if you're watching this replay, definitely leave questions in the comments because, I trade full time. Okay. I prove every single day that I'm able to get in line with the market. I'm not like all these people that try to say, hey, I'm getting the Lamborghini and all this nonsense. That's not my character. So I'm not going to be doing that nonsense. I just don't do that. That's not me. And I refuse to become something that I'm not. Okay? But it's very specific things that enable you to be consistent, to trust yourself, to trust your bias, all these different things, and to be effective in the market. There's very specific things that you have to do. And this is part of that. Okay? This is part of that. All right? So, moving along, using what we just discussed, all those different things, okay, for the last week or so, last week or so, we've been anticipating what price is going to do inside this fair value gap because we went from high to low. We saw that price attack this fair value gap low here, filled it in. Once it filled that in, obviously you could see it was perfectly delivered, and then it started retracing, right? You could have assumed that when this fractal low formed, the next 2 days can be anticipated to be bullish, just like how we talked about if a fractal high formed here, the next 2 days can be reasonably anticipated to drop to a fair value gap here. Well, the same idea comes into play here once this liquidity was taken and once we created this fractal low here. Even though price looks like it's going to continue being bearish, the next 2 days after this fractal pattern formed, look what happened. It was a bullish day and a bullish day. They weren't too crazy, but it did the same thing here because this took buy side and then retraced into this fair value gap. There's a narrative there that you can engage. And then there's also the same thing here, using fractal highs and fractal lows as a gauge in terms of where or what price should potentially do given those three questions, right? So price was bullish there. You could have framed a bullish move there, right? You could have used the economic calendar to try to identify, as we've been discussing, when potential moves will have excitement, right? And Wednesday of last week, if we go back and look at what happened Wednesday of last week, had the FOMC meetings, right? So you can see how Wednesday created the large range move. Okay? It created that large range move to fill in the rest of this fair value gap, but it really was reaching for this 2-day order block here. And guess what? Wednesday pushed price up there. So that's showing you the one of the three questions, right? This was reaching for a retracement, created a fractal low. So there's another layer to why you could have trusted this retracement to occur. And then seeing this order block here, which we also discussed in my private community ahead of time, okay, seeing how that occurred, we can also see how Wednesday of last week had that news event that pushed price up into that order block, also completed the rest of the fair value gap fill in that weekly chart. So there's more timing, more context to the narrative, right? And now that price has reached into that level, we can reasonably anticipate, given the fact there's lows down here, we've already done one of those three questions. We've attacked some form of a higher low, which are these previous day's highs, hit into a fair value gap and an order block at a premium. You take this high to that low, you measure it out, you can get a premium level there. So we've fulfilled a near-term premium in a market that looks like it's going to continue to be bearish. We came off the high. It hasn't shown any respect to these PD arrays, right? I'm not going to get into it too much, but if you count how many PD arrays are below us, we have 1, 2, 3 in terms of the order block. Price has smashed through all three of those. Failure to go higher, so there's potentially invalidation signals there. 3 PD arrays below price have been basically disrespected and showing no support for this bullish move. So, given the fact that this retracement has occurred and we've continued to smash through lows and discount arrays, seeing that this premium array is holding, we can reasonably anticipate now that the fair value gap's been filled, that this weekly chart is now going to attack these previous lows on its way to attacking this potential equal low or this previous week's low. And remember the list of liquidity I gave you. Okay, when we've come to a narrative determination, which we have here, basically, right? Invalidation for the buys, 3 PD arrays have been broken to the downside and showing no respect. Prices were traced to a premium array, 2 premium arrays, as well as sweeping up these liquidity pools here. And then prices rejecting off of that high. So we can reasonably anticipate that the fair value gap and order block delivery has been fulfilled, and we're now seeing the reaction from that. So the next draws on liquidity near term would be these previous day's lows. If we go to the daily, I mean even just the 2-day, you can see this previous day's lows. So those are in the crosshairs. And then we can also see the larger move could end up being price getting down into these lows here, which is one is a previous week's low, and then one is a previous low from the previous month. But this in turn creates an equal low. And if we go to the daily, I believe there's a fair value gap. There's a fair value gap way down here that could be reached into. This whole move here can end up being a possible market maker sell model. If that is the case, if it does keep showing us evidence, this could be the original consolidation. Right? This can be our first stage accumulation. Second stage accumulation, which would line up with this delivery. It didn't break out of this range here. So that is a signature that's pretty familiar and could be significant. Right? Given all the things we've also discussed, here's another layer to it if you like market maker models. Here's a smart money reversal here that was aggressively pushed lower. And then you can reasonably anticipate that this will have a retracement. We'll also potentially have a retracement here to eventually attack down here and then fulfill this potential bearish narrative. But before that would be confirmed or fully utilized, or even utilized at all, we can just observe what we've discussed here so far. All right, which is we go from high to low. 3 PD arrays have been broken to the downside. There's a fractal high here now. So the next 2 days can potentially be bearish. To do what? To reach for previous day's lows or this previous week's low. This is a previous week's low here as well, because it's a Sunday or Monday of last week. Okay, and this is the new week candle here, or new day candle, and week candle, I guess you could say. Right, and now price is just basically falling lower. So we'll see if this holds. If we stay below this daily fair value gap, price will, it could reasonably be trusted to go lower, given all the things we've discussed so far. And there's even deeper levels we can go in terms of fundamental analysis and, like seasonality, COT, interest rate analysis, which is one of those things that I'm going to bring up. I'm not going to talk about COT and seasonality. I think I've already talked about that on this channel. But let's keep it as simple as possible, okay? You also want to consider risk on, risk off. Okay, what does that mean? Well, if DXY is bearish, what should the other assets do to confirm that bearishness? And if DXY is bullish, what should other assets be doing to confirm the bullishness in DXY? Right? If DXY is bearish, we should see the interest rate market confirm that in some form or fashion. We should see the interest rate markets confirm whatever the DXY is doing in order, so since this is bearish and it's going lower, well, we'd like to see the interest rate markets confirm that by seeing the bond yields going lower as well. Right? And then we want to see the T-bond futures or T-note futures. We'd like to see those go higher as the yields go lower. That would confirm DXY bearishness. Okay, and all the things we've discussed in terms of price being bearish in the DXY, all of that gets confirmed not only by the risk on, risk off principles, as well as the interest rate markets here, right? That would be confirmed by, doing this process. All right. So yeah, with DXY falling here and our assumption that DXY is likely to potentially reach for this previous week's low, on its way there, our draws on liquidity can be all these lows here, and then liquidity from the list I gave you, right? I hope you see how things get used together. It's not just one topic fits the whole situation and is like a holy grail. They all fit together like a puzzle. It's like a well-oiled machine. And of course, this takes practice. It takes longer for me to do my own personal analysis than it takes me less time to do my own personal analysis than it does if I'm sitting here explaining it, because I'm trying to make sure that each element is understood, okay, and how they fit in with one another, and how you can, go back test in an actionable way, right? And part of that has to do with the list of liquidity. Part of that has to do with understanding the 3 questions. Part of that has to do with you understanding, of course, daily, weekly ranges. And part of that has to do with you understanding the intermarket relationships, like what the relationship is with the interest rates and how that affects the DXY, which then in turn affects our indices. All right. So I hope all that made sense. If there's any questions, let me know in the comments. But yeah, so in terms of using these other assets like risk on, risk off, I will pull up this list so you can also screenshot this as well. Just gotta go find it real quick. Give me 1 second. There it is. So I hope you can see this well. Okay, so given what we've just discussed in terms of the bias process, the basically navigation of the narrative using one of those 3 questions when you look at the higher time frames, and then of course coming to confirming the DXY going in a particular direction, in this whole process, you want to make sure you understand risk on, risk off. What does that even mean? Well, risk on means companies are willing to basically put risk on other assets versus the DXY, which would mean DXY is going to be bearish and other assets would be bullish. Or risk off, which generally pertains to DXY being bullish and investors being unwilling to put risk in other assets because those will be bearish and DXY will be bullish. So risk off means they're willing to basically not have any risk or take risk off of these other assets versus the DXY. Basically they're investing in the DXY because it's bullish. Or risk on, which means basically they're willing to put risk on other assets opposed to the DXY. So that's significant. That's a very significant piece of information there. Because when you're trying to observe bias, it's like an onion. It's not like you can just look at the S&P or some currency and just be able to trust that it's going to do one thing or another. Everything is interconnected. And again, it's like a puzzle. It's like a well-oiled machine that has to be used with multiple different parts together. Okay? So I hope that makes sense. This is very important. As you can see, it's got T-bonds and T-notes. Okay? So when it says T-note and T-bond, it says the T-bond futures in one of the assets. I hope that I'm not trying to have that confuse you. But the T-bonds is like this here, watch. So these are the T-notes, the 5-year and 10-year T-notes. And the T-bond pretty much does something similar. They move kind of in conjunction with each other. Something you want to notice here is that the T-note, the 5-year here has a SMT with all 3 of them. So that is a potential bullish signature that could reach for this previous week's high or this previous week's high. Okay. So with that being bullish, we'd like to see the yields potentially be bearish, which it looks like they may be, because we also have SMT at these highs. So you see how there's SMT between here And there's also S&T between here. There's 3 interest rate markets in terms of the T notes or T bonds, which are used in conjunction with each other. And then there's also 3 yield markets that you got to pay attention to also. And you observe SMT. There's the 5, 10, and 30 year, similarly to this, which is the 5, 10, and 30 year as well. The T bond asset that you see here, that's the 30 year. Okay? So remember, DXY likes to do the opposite of what this does. So if this is bullish, DXY is generally going to be bearish. If this is bearish as well, while this is bullish, that's double confirmation in terms of high-level intermarket relationships that the DXY is going to likely go lower. And we can kind of go and see that translating into this. Adding that onto the list of 3 questions, adding that onto the list of liquidity pools, and what price is doing, okay? And then, of course, merging all that with the economic calendar to time when particular levels hit, or when it's going to be hit, or what day would lead us to attacking a particular level, and then also timing the move away from it using the economic calendar. And then how do you trust that? How do you trust the narrative and the process that we've discussed? Well, all the things that we have basically laid out in terms of process, that's how you trust it. You add these things together, multiple different confluences, as we've discussed, and then you get to a determination as far as whether this is going to be potentially high probability to go down and reach these lows, or is it going to go the other way, or is it just not to be trusted because it's in consolidation? Which is one of those 3 questions. And if price is consolidating, or if price is, bearish, but we're trying to anticipate a bullish retracement, counter trend ideas lead you to lower your risk, right? And lower your frequency. If we're in consolidation, lower your risk, lower your frequency by half. And if that's something you don't want to listen to, then, you'll learn eventually. I know I had to. Because what we aim for as traders is high probability, low risk setups. How do you get high probability, low risk setups? When you have all these things in conjunction with each other, when intermarket relationships agree, when the economic calendar is showing you in conjunction with the higher time frame of an asset you're trading that we are likely to continue to push in that direction. The validation and invalidation principles, like if price is retraced here, when would this be invalid for us to go lower? Even with all the things layered together that we've discussed, what would invalidate this going down to this low or attacking these lows? Well, invalidation, validation, just to put a cap on this daily bias process, or weekly bias process as well. To put a cap on that, you got to look at validation and invalidation. What's a simple way to validate or invalidate an idea, or a bias, or a narrative, or whatever the case may be? Well, when price delivers from an area, if we're bearish, what are the next 3 PD arrays that are in close proximity? If we're assuming price is going to be bearish and go down to here, well, let's look at price real quick. We have an order block here. We have an inversion fair value gap here. And we have a high, also an order block on the 2-day, which I'll pull up. Okay, we also have a weekly order block, it's a 2-day order block. But yeah, we got an order block, inversion, fair value gap, and a order block here, and then there's a high here as well. So if price breaks 3 of those PD arrays that we just labeled, are you gonna continue forcing the sell? I would hope you would say no. That would invalidate the idea of price going lower. That's a simplistic way to view validation and invalidation when it comes to you having trust in a particular idea. But if all 3 of those are respected, that's just another layer to confirmation. That's another layer to validation of your narrative, or your bias, or your draw on liquidity, so on and so forth. All right? So again, I hope this stuff made sense. If you take what I've just explained for the last hour, or I think it's been like 40 or 50 minutes, whatever. If you take what I've just explained and you go and apply that and you master the simplistic view that I've just laid out into your hands, you will definitely see a whole lot more clarity when you're navigating liquidity, when you're trying to justify why you think price is going to go higher or lower, and whether you can confirm or deny a particular idea. And if you see any of your favorite influencers talking about this is going to go this way or this is going to go that way, if you use these filters that I've just given you, you'll be able to see when they're going to do it wrong. And then guess what? You'll understand why they got it wrong. You know, I've tried to keep this as simple as possible because I've taught over 175 students. And from what I've learned, dealing with all these different personalities and all these different ways of doing things, I've learned that you don't need to keep things complicated. You may think that this is complicated for now. Maybe you do. Maybe you don't. But if you do think it's complicated for now, it just has to do with your lack of experience. Right? It just comes with you don't know. It comes with the fact that you don't know what's important right now. You don't know how to validate or invalidate. You don't know what confirms to help you trust or not trust a bias, which is all the things that I've tried to basically simplify here. I haven't, of course, taken away from anything that's taught by Mr. Huddleston. Okay? But I've pointed out some very important factors that help you trust a potential bias, that help you validate a potential bias, that help you layer specific confirmations as you determine a narrative. I've given you 3 questions to ask yourself right away, right when you get on the chart. I've given you information on how to utilize the economic calendar in the view of like a macro, like how we use macros on the lower time frame. The economic calendar is basically your macro list for the higher time frame delivery. Like we discussed how price ran up here. This was a Wednesday of last week. All the other candles were slow, but once Wednesday came, it reached us up and pushed us up into that order block and finished the fair value gap. And what happened on Wednesday of last week? It was the FOMC meeting. That's what gave it the institutional sponsorship, which is what's needed for price to deliver on these higher time frames. So if you're looking for this retracement and then you're trying to gauge when it's going to hit that and then potentially give you a continued move in this bearish direction, if you assumed bearishness, you use the economic calendar, not only to push price higher, which is manipulation, but also to, when price gets to that level, when is it going to deliver? Well, guess what? The economic calendar has a day and it has a time, multiple days and times. So you use that in conjunction with everything else that I've discussed here today. And this is like one of the most important processes. Okay? Because if you don't know how to trust or navigate or understand what liquidity levels get used and how they get used, and what liquidity levels you should even be looking for, which is a problem for most traders, especially in this industry or in this sector of trading, like the strategy, that being smart money concepts. It's a very missed piece of information, which in terms of navigation, trusting. Like, how do you trust the bias? How do you trust the order block? How do you trust that price is going to go lower to this previous week's low or previous day's low? How do you trust that stuff? When is it going to happen? Right? What else could it potentially do? Well, we have an answer to all those questions. All right? So again, if you guys have questions, definitely let me know in the comments. I've pretty much got through everything that I wanted to get through besides the weekly prep, which is what we're going to discuss here. And then we will cap the video. All right, so I hope you guys have gotten value so far. If you did, definitely smash that like button. Hit subscribe if you haven't already. And let me know if there's any topics you'd like me to cover, because I'm more than happy to help you fight through whatever you go through. So yeah. So in terms of the weekly prep, again, we start obviously from the economic calendar because of the things that we've discussed already, right? How it becomes influential when price is going to reach for a particular level at the start of the week, and then once it hits that particular level, when you ask those three questions we've discussed, once it gets to the level you're looking for that could potentially send price in a particular direction, right? It could be, the economic calendar can be used to send price up in manipulation, and it can also be used to send price away after the manipulation from, like, for example, this order block, right? The FOMC news last week sent price up, right? And then I'm not sure what happened on the Friday, but that whatever happened on Thursday, Friday, basically sent us into initiating this push lower. How do we confirm that that was the idea? Because we call for bearishness in my private community, and everyone has seen, we've walked the indices in the DXY like a dog the last 3 months, and they can testify to that. But when price hit this and has now pushed away, how do we confirm that? Like we discussed, we go over the interest rate markets. Okay, we've seen that prices wanted to potentially rally in the bond yields. We've seen that there's now SMT at these highs here between the interest rates. It's also a fair value gap that's been tapped into. Okay. There's SMT also at these lows. So all of that helps me justify the fact that this is going to possibly continue to go lower. Okay. So I stick to that bias. And then when it comes to the indices, we come over here and we use that same idea. Given the fact that we believe that price is potentially going to drop further in the DXY. Again, the validation point for this to continue going lower has to do with this order block. I mean, even the midpoint of this wick, we got this daily fair value gap, and we got this order block here, and we also have the high here. So if price was to blast through this daily fair value gap, this inversion daily fair value gap, we would be a lot less bearish. And then if we see the yields go higher and start attacking these, and then possibly, if we see this go lower, that also helps invalidate. But if everything stays just as it is right now, we should see price attack these lows here, probably dig deeper into this order block, or if there's a fair value gap down here, and then there's also a weekly fair value gap down here. So the overall higher time frame narrative, in my opinion, has to do with price possibly reaching lower to come down and get into this fair value gap here. Again, on the way to that, what other liquidity levels can be anticipated as near-term or daily draws on liquidity for us to use, so we have a move all the way down instead of just having maybe that one move? Well, I gave you the list of liquidity pools that you're going to want to go scoop up, because all those levels, for example, previous day's high, previous day's low, previous week's high and low, previous month's high and low, so on and so forth, all those can be utilized as potential draws on liquidity. Like for here, you can see how this previous week candle has a previous week's low. So if this low here, if this area here is the draw on liquidity, price is going to have to break through these first to get down into that. So the narrative, if it's bearish, given the things that we've discussed, which is what I'm going to stick behind for DXY, at least for now, if that's going to hold true, price is going to reach down and attack these previous week's lows first. You also have this wick here. You break that down into quarters. You see that the midpoint's there. You have a 25% and you have a 75, and then the full wick. Those also can be used as targeting principles, or targeting narratives, right, or ideas. Where is my weekly fair value gap? All right, so we got this weekly fair value gap, so that's going to be something that we monitor. And that's something that we're going to use to justify this potential bearishness. And price is continuing to go higher, obviously, with the indices. What has instigated this massive move? Well, we can observe NVIDIA. Okay, NVIDIA in the tech sector has definitely portrayed this as, you know, a massive freaking savage, keeping its strength to go higher. And then, of course, off the heels of DXY and the interest rate market sharing insights with us that, you know, price is not done going higher, and this was just a run on liquidity. So yeah, now we see price, unless this low here breaks, I'm going to continue being bullish, and then I'm going to, of course, continue being bearish on the DXY as long as this high stays intact, as long as these PD arrays we mentioned stay intact. I'm going to stick to my bearish DXY bullish indices until something changes, which would mean this low breaks, because then that would be the inversion fair value gap, that would be this low breaking, and then also this down candles range would also be totally disrespected. So there's our 3 PD arrays for this idea in terms of trusting bullishness. And then what would invalidate that bullishness. I did point out to my private community that we have SMT here. It doesn't seem like that really did anything. It did trigger this retracement. The Dow in particular was the weaker. So we'll see if that continues. We did call for this retracement last week, which we did participate in my private community, which again they can testify to. For the last, can't even remember how long it's been. It's been months and months and months of just precision. Not perfection, but precision nonetheless. But yeah, the prep or the idea for this week is obviously what I just said. We're going to continue being bullish until something changes. We have this wick here we can observe what the relationship will be with this midpoint of this wick that can act as a resistance point. Again, we have SMT at these lows as well here, just like the bond or the T-bonds has that SMT here. The indices have SMT there. So where are the 3 PD arrays to invalidate this market going higher? We got an order block here, we have a low here, we have another low here, and we have a fair value gap. So if price was to smash through that, then that would trigger us to believe that, you know, bullishness is going to stop, and we would have to see DXY go higher to then justify the trust in that. Also, if that was the case, this would have to go higher because the DXY follows the yields. So this would have to go higher, and then this would drop lower. Again, if the indices were to go lower, if we were to trust the indices to go lower, that's what we would have to see. Okay. So until that something like that occurs, if none of that occurs and we just continue what we're doing, then obviously we just continue what we're doing. We continue pressing higher. We are at all-time highs. So you keep following the all-time high delivery, keeping in mind the validation and invalidation that we've discussed and all the other intermarket relationships we've also discussed for daily bias and weekly bias. You keep that in mind, but you keep pressing higher unless you're proven otherwise. Because you're not picking a top, you're not going to pick a bottom. You're going to lose most of the time when you try to do that because the market's engineered to make you do that anyway. Okay, so again, the invalidation would be this low, this order block. Okay, and then let me see, is there 2 order blocks? Yeah, there's 2 order blocks. So the invalidation for this to continue would potentially be these lows and then this fair value gap. Okay, if this fair value gap got broken through and then DXY turns, that would be our signal that we're probably going to change and see a lower move potentially. But we're going to continue being bullish. Okay, so I hope that is clear in terms of your overall narrative from this side of the fence. All right, and now So again, there's ways to justify other fundamentals like COT, seasonality, so on and so forth. We're not going to get into that now. I think I've already discussed COT and seasonality on this channel. So if you want to go dig into that, you can go dig into that in my other videos. But all the things that I broke down for you today are very, very effective and can be your overall process for your bias. Okay, so one more thing I want to talk about after I break down the rest of my opinions here in terms of what I think price is going to do moving forward. It's going to be basically different categories of learning that you're going to want to focus on. We do teach this structured approach in terms of trader development in my private community, but I'm going to give you guys the specific topics that we cover, so that maybe you can at least be aware of them, and maybe that'll assist you in your own studies. All right, but yeah, so let's pull up the 3 indices real fast. So yeah, we're going to do this analysis too. Let's get the SMT. So we're going to observe the 3 the 3 indices together. Again, if you look at the lows here, in conjunction with this low, we can see that these created higher lows and the Dow made the lower low. But all it did was reach down for this fair value gap. Similarly to what this did, it reached down for the fair value gap. But now that we're above this high here, remember what I was talking about, how I'm assuming bearish DXY and bullish indices, and I explained why. Well, here's another reason why that can be valid. We have an order block here on this monthly chart. So prices, another invalidation point would be the midpoint of this order block on the monthly. If that's broken through, then that's another layer to invalidation. But if it's not, it's one of those things that adds on to the onion layers of validation confirmation for us to continue going higher. Right? So if we take that, we drop down to this weekly. Our monthly order block, like we just looked at, is here, so it's this high. Okay, so it wouldn't be really unreasonable for price to retrace and then hit this fair value gap and then bounce. But again, we got the midpoint of this monthly order block, we have this fair value gap, and all the other little things that we discussed in terms of validation for price to continue going higher. And what would throw that off? That would be, of course, the midpoint of the monthly order block we pointed out getting attacked and closed below. Then also, before that, we would have to see these completely break and then blow through this fair value gap. Otherwise, we trust and continue to trust price continuing to press higher in conjunction with, of course, these relationships that we discussed as well, with this going higher and then the yields going lower, which presents us with a bearish DXY and a bullish continued sentiment for the indices. So I hope that makes sense. If you guys have questions, again, let me know in the comments. Otherwise, I hope you guys have gotten value, and I hope this stuff makes sense. But yeah, so that is essentially my idea for what I think is going to occur, the different things I feel like are going to happen. Again, price is going higher, so that's going to mean that this draw on liquidity would be in my crosshairs. We have a new week opening gap here, a new week opening gap here. So that's also potential areas of support, supporting the idea that price is going to continue to reach for the highs. We also have, for more near-term targeting, we have the lower time frame liquidity levels, which I'll let you take from the screenshot you should have taken and go try to identify in this area what lower time frame levels are there. But then also you break down this wick here, because we're on the higher time frame. You break down that wick in the quadrants, you have 4 different levels of drawn liquidity as well, in conjunction with the overall bias going higher, and in conjunction with the liquidity levels that we looked at and talked about earlier in the video. Okay, so targeting wise, bias wise, process invalidation, validation wise, like we've discussed a whole lot of stuff in this hour and 20 minutes. So if a lot of things kind of went over your head, you got to watch it again. And then, of course, ask questions if there's any holes you feel like were left in your knowledge. But yeah, so that's pretty much all my opinions for what I think is going to happen. Of course, we have this fair value gap, which was spoken about. We got this SMT. Why would this SMT not be valid just yet? Well, to validate SMT, you got to use a DXY. If there's two SMTs, like say there's one at the lows and there's one at the highs, you have to use DXY to validate which one is going to be used. So in this case, DXY is going lower, so that invalidates the fact that this SMT is present. So the bullish SMT that we saw here between the indices, which I'll show you again, right? The Dow and the S&P are showing that they are weaker than the NASDAQ, and you can see how that's came to fruition. NASDAQ has been aggressively moving higher because of NVIDIA. And then we also have, like I said, the weaker, because this failed to continue and make a higher low. It made a lower low. This made a lower low. And then this made a higher low. This was a pretty aggressive drop. So if we were to see DXY turn and all the other factors reversing, showing bullishness in the DXY, then this run stops here. If we start to see the indices attack those invalidation levels I discussed, which is the low, the order block getting broke through this low and then smashing through this fair value gap, all of that would indicate the SMT would then potentially become valid. But unless that happens, then we stick to our bullishness. Alright, so that's pretty much everything I want to discuss with the weekly prep. Again, you also want to keep in mind the new week opening gap, which is on the list, which I hope you took a screenshot of, because the open price and the previous close on Friday, the open price on Sunday and the previous close on Friday of the previous week, that gives you your new week opening gap. That new week opening gap has your Sunday's open price on it. Your Sunday's open price acts as a power of 3 reference point for the weekly range. And if you don't understand the weekly and daily ranges just yet, I have a video in my Power 3 series that deep dives into weekly and daily ranges and using those to navigate your Power 3 and weekly range and daily ranges on a regular basis. So yeah, and then we also see a previous week's high here, and we got a previous week's low here. So we're inside the previous week's range when we're trading here. So those are liquidity pools that if price is going to continue being bullish, it's going to attack, of course, the previous day's high, which has been attacked, which is a Friday high. It's typical for Friday's high and Friday's low to be in the crosshairs for Monday trading, Sunday and Monday's trading. But yeah, so those are near-term draws on liquidity. And like I said, they're all mentioned in the list of liquidity pools that you should go back test moving forward as an actionable step. So yeah, the last thing I want to discuss here has to do with, let me go pull it up real quick, has to do with the topics that, for one, we focus on in the private community and dig into deeply, very structured manner, in a very structured manner. But it's also, it's pretty helpful if you want to just go study on your own, right? And trying to understand what things will come into place to piece things together aside from all the stuff that I've discussed with you guys. So let me go pull up the list here. Yeah, shout out my recent student Harley, putting in work. So yeah, where's it at? Okay, so in terms of the trader development process and roadmap, in terms of what we do in the private community and what I give everybody to focus on, and what you can focus on whether you join or not, you need to have an answer to these questions. A lot of things have to do with questions. Like today, we've talked about the 3 questions to determine bias. Well, you got to ask yourself, do you have an answer to all these questions? How are you going to manage yourself psychologically when you're trading? What times are you going to trade, and what timing elements are important to when you do trade? And how do you use them in conjunction with liquidity and framework of a setup? How do you manage your risk? How do you mitigate losses? Okay, what's that process look like? These are all processes that then create your trading plan. All right, your price navigation skills, similar, to what we kind of discussed today. There's a lot more to it, obviously, but the things that we've already discussed, obviously, can help you a tremendous amount. And if you master those things, you don't need much more anyway. In terms of navigation, what is your daily bias process? We went over daily bias, the process in which you can utilize intermarket analysis, risk on, risk off, like we talked about. Price models, what model do you use? What are the rules? When does it work? When does it not work? When's it high probability? When's it not? What makes it high probability and low probability? And what condition do you feel comfortable in? Trading plan development, how developed is your trading plan? What's included? Which all these things should be included and have an answer to. Point of interest identification has to do with the PD array matrix, has to do with you observing how price delivers from trending to from consolidation to trending to retracement, how that all fits together, and helps you gauge which one of the 3 questions we discussed today is going to be attacked. And then how do you determine high probability in terms of POI identification using validation, invalidation, and also trade management. Targeting, right? Targeting has to do heavily with the list of liquidity pools and answering one of those 3 questions we've discussed. So you can see how impactful the thing is that I've discussed today in terms of bias and identification of, which level is going to be attacked and why. And then, of course, routines. What are your routines? What's your routine to manage your psychological effectiveness? What is your routine to manage the highs and lows in the marketplace? What are the routines that you have or processes you have in place to manage when you do something wrong or when you start feeling like a gambler? Okay, what are the things that you can hold yourself accountable with, and how do you go about that stuff? What is your bias process? What is your process for invalidation, validation? Like they're all routines. Okay, what is your fundamental analysis process? What's the routine that you employ? How often do you do your fundamental analysis? How often do you trade? Right? What's the risk percentage that you use? Are you consistent with doing it the way that you describe? Right? If you're not, how are you going to get yourself in line? What's your improvement process when you do something wrong? Okay? All these things are related to your ability to be profitable or not. Which is why, again, I mention a lot of the things I mention on YouTube, but then it's also why I also offer help in a private community where people can come and really dig into this stuff with people that are also on the same trajectory, and actually apply what they talk about. They don't just say it to sound cool, right? With no fluff, no Lamborghini lifestyle, nothing. Just purely, how do you become profitable? How do you become an effective day trader or swing trader or whatever trader you're trying to be? That's the main goal. And it's not always flashy, but actual profitable trading is not flashy. Okay, it's as structured and repetitive as possible. It's continuously doing the same things that equate a positive result, while also having processes to manage all of these different things we've discussed and also having an answer to all of these questions. What is your targeting process? How do you identify POIs, invalidation, and trade management? How do what's included in your trading plan, and do you follow it? Right? How structured is your plan? Do you even have a plan? Price models and framework. Right? What are your favorite things to utilize? And what makes it high probability or low probability? Bias process, price navigation, risk management mitigation, mindset management, and psychological management, and a process of improvement. How do you deal with the highs and lows? The time elements. We added one that most people don't know today, which has to do with the economic calendar and identifying when that thing can actually help you anticipate when price is going to manipulate to a particular level. Like if it's bearish, when is it going to retrace? Well, the economic calendar can help you figure that out. And then when is price going to deliver back in your direction in the overall bias after you've done the bias process? Well, the economic calendar helps you identify that as well, right? Targeting, I gave you the list of liquidity pools today. Those all are targets. And if you come up with a narrative based on the bias process, the simplistic bias process even that I gave you today, like even if you just apply that, it'll help you with targeting. It'll help you with many things in terms of price navigation. But again, if you want to go deeper and you feel, if you want to go deeper, you could join my private community. If you don't want to go that route, you can just take what I'm showing you here and try to do it on your own. Find answers to all these questions, because that is critical. Okay? It's so critical. And again, there's been 175 plus students that have come to me and had some pretty good results so far, like Harley here, right? And many other I show on my Instagram. But yeah, I hope you guys got value from today. I've discussed a ton of actionable steps that can get you moving forward. I just definitely wanted to mention these different things. I definitely wanted to give you access to what you could be focusing on and how you can structure your focus. And of course, let you guys know, because a lot of people don't know, we have a private community. Okay, so I definitely want to always at least mention it, because some people don't know, and some people want to join, some people don't. But I give more than enough for you to go and actually improve yourself. But again, there's levels to this stuff, and some people need more help than others, which is why I offer what I offer. And then, so yeah, we're gonna go live again throughout the week. I'll probably keep it to most likely Thursday, because again, like I said, today, the day of, the day before, the day of, and the day after a holiday, which is what we're kind of dealing with right now. It's Memorial Day. So God bless any of the vets that have fought for our freedoms in America. Right? Things gotta change, but it is what it is. But the day before, the day of, and the day after generally is low probability. So and anybody that watches this replay, I hope you, of course, got value. We talked about a lot of things at the very beginning, but I appreciate you guys hopping on. And if you're just hopping on the live right now, we discussed so many things, so definitely rewind, because we've been on for an hour and 35 minutes and discussed a whole range of things, from bias, the processes, the weekly prep, targeting, so many things, fractal highs and lows and how those impact bias and assist you, validation, invalidation, right? We've talked about so many things, so definitely worth your time to go back and rewatch the replay. Okay, so again, I hope you guys got value. If you got questions, let me know in the comments. I'd be happy to make a video structured around your particular issues. I mean, that's the whole reason why I'm even live. I could just be, in my private community, not worrying about going live. But I know there's a lot of you guys here that either can't join or, just want to be part of the YouTube family, which is totally fine, and I appreciate your support. But again, if you guys want to join the private community, the links are in the bio. If not, I will see you guys live on Thursday. And I hope you guys have a good rest of your week until I see you guys on Thursday. Take care.